A Senate investigation just confirmed what we've all suspected. Canada's housing crisis isn't just a supply problem. It is a government dysfunction and bureaucracy problem. And the numbers in this report are so damning, they had to call the report out of reach. The Senate Banking Committee released a report this week that should make every level of government in Canada deeply uncomfortable, if not scared. They reference a 2024 municipal benchmarking study that shows that it takes 11 years to build a house in Toronto, where in Calgary, it's under 3 years. Same building codes, similar zoning. Actually, Calgary is cheaper from a development charge perspective. Toronto charges add $200,000 to a Toronto home, and in Moncton, it's only $10,000, for example, for the exact same infrastructure needs on a per-person basis. The GST exemption for new homes hasn't been updated since 1991. Back then, it covered 95% of new construction, and today it covers almost nothing. The Senate's conclusion here is really clear. Cut the GST entirely on homes under $1 million, tie federal infrastructure funding to municipalities actually reducing their fees and approval times, stop charging taxes on top of taxes or government charges. If implemented, these changes would create immediate 10 to 15% price reductions on new builds and could shave years off of construction timelines. This means more affordable housing done the right way by making prices lower. But here's the part that nobody's really talking about this. Even if we fix all of this, we're still adding 500,000 people per year while building maybe 250 units. And so it doesn't take a rocket scientist to know that the math just doesn't really work here. So before we dive into the full report, hit the subscribe button. This is one of the most comprehensive breakdowns of Canada's housing dysfunction that you're going to see. And you need to understand what's actually broken before you can get it fixed. Let's go through the report piece by piece. And so despite spending the largest portion of our GDP on housing, Canada has actually seen the worst deterioration in housing affordability out of any G7 country. And the Senate started looking into this right as housing affordability was peaking. And since then, we've seen some marginal improvements. Prices have softened slightly. Population growth has slowed a lot. The federal government launched the Build Canada Homes Act. We've seen GST removed for first-time homebuyers. There's a new housing agency created. MLI Select is getting a lot of rental housing. But here's the paradox that the committee found. Despite all of this activity, many Canadian housing markets face a fundamental contradiction. Homes are priced beyond what buyers can afford, yet construction and land costs have actually declined. Think about that. Building is cheaper than it was 2 years ago, but homes are still unaffordable. And this tells you that the problem isn't construction costs. It's everything else. I actually had a commenter ask me about this on a recent video, so I wanted to highlight that because it's basically the theme that's going to be covered in this video. It says, can you talk about the systematic reason development costs are so high, aka they subsidize low property tax rates by making new buyers or builders pay the real cost of keeping up the rest of the city and not increasing the property tax rate by the appropriate amounts. New developments are subsidizing the old infrastructure. And this is true. A lot of people have a hard time accepting this, people who own property, that they also benefit from all of the new parks and roads and infrastructure and water and sewers that are going in, yet only new houses pay for it through development charges because it's all CapEx. And the way that municipal budgets are structured is that CapEx gets funded by development charges, capital expenditures, and OpEx gets funded by property taxes and other revenues. So if you actually look at a breakdown of property taxes across your Ontario municipalities have the cheapest, Ontario and Vancouver, basically, Toronto and Vancouver, GTA and Lower Mainland, have the lowest property taxes relative to home values. Yet places like Calgary, which have low development charges and low property taxes, are somehow significantly more affordable and growing. Like Calgary is adding tons of units despite and keeping up with demand and not getting affordability completely blown out like Toronto and Vancouver, despite seeing record population growth for 3 years in a row. Like there was a period of time where Calgary was growing at 11% year over year. And so a place like Toronto is not only losing on timelines by taking 11 years to build 3x longer than a place like Calgary, but it's also losing on the fact that they add in double the fees compared to some of these more affordable municipalities. Mike Moffat from the Missing Middle Initiative testified that new home sales in the Greater Toronto Area have collapsed by more than 80% since 2021. And I just recently did a video on this Similar declines have appeared in places like Vancouver, but Calgary is not, and the prairies and a lot of the more affordable markets are not getting hit as hard. And developers in Toronto and Vancouver aren't building because the economics don't work anymore. And yet Canada has the highest share of investment going towards housing in the G7. You would think, because we're pouring money into this sector, we should be getting good outcomes, but we're getting horrible outcomes. So the Senate's conclusion is that the crisis has been caused by bad public policy, which means that right policy fixes can actually help us move this in the right direction. This is the first time I've seen the government blaming the government for this problem. So let's start with the easiest fix that they recommend here, which is GST. In 1991, when the GST was first implemented, the federal government created a rebate for new homes valued up to $350,000. And at that price point, 95% of new homes in Canada qualified for the rebate. So basically anybody who was over that value, it was like a wealth tax, right? But that threshold hasn't been updated in 34 years. So today, essentially zero new homes qualify. I've never seen a house sell for under $350,000. The rebate is functionally dead, which means every new home in Canada gets hit with full GST or HST, adding anywhere from 5% to 13% to the purchase price, depending on the province. And the Senate found that if the federal government eliminated GST on homes under $1 million and phased it out for homes between 1 and 1.5 million, we'd see immediate price reductions of 10 to 15%. Basically, that tax piece gets stripped out, houses become more affordable instantly. Not eventually, not after construction ramps up, but immediately. This allows developers to reduce prices, and it allows buyers to afford those homes. Now the federal government did introduce the first-time homebuyers GST rebate in 2025 through Bill C-4. It applies on the first $1 million threshold, but it only applies to first-time homebuyers. And the Senate testimony basically said that this is too narrow. And the reason is because first-time buyers only represent about 20% of new home purchases. They're 50% of the total market, but 20% of new homes because they can't afford them. So if you isolate the rebate to them, you're not actually increasing supply. You're just changing who gets to compete for the same limited inventory. And by all means, first-time buyers do deserve a leg up relative to the rest of the market. They're the ones who have been most impacted by this, but they can't really move the needle on getting more housing developed. And places like Minneapolis in the US have showed us that if you build more rental, or if you build more of any type of product, more luxury condos, more single-family detached homes, because it's not a consumption good, like it's not like a car where, well, even a car is not a good example, but it's not like food where you buy a meal and because you've eaten that meal, nobody else can have it. If you buy a meal or if you buy a house, you are leaving the previous house and moving to another house. And so a filtering takes place. And a lot of people don't really believe this or agree with it, but it's a fundamental economic truth. CMHC has put out quite a few reports on this recently. And so we just need to build any supply. And in order to do that, reducing friction, bureaucracy, and government's share of new home construction for all purchasers would make that happen. And then people who are buying these brand new homes, the people who can afford them, typically are more well-capitalized buyers, not first-time buyers, will buy those new houses and they'll vacate their older houses, and first-time buyers can buy those because they're more likely to be able to afford those. Now, Dave Wilkes from BUILD, the Building Industry and Land Development Association, pointed out that seniors downsizing from their existing homes don't qualify. For example, they're paying full GST on a new condo or new bungalow, which means they have less money for retirement, which means some of them don't want to downsize, which means less housing inventory for young families because of that filtering that I mentioned. Mark McQueen from Wellington Growth Partners put it more bluntly. When the GST was first introduced, then Finance Minister Michael Wilson said it shouldn't apply to necessities of life like groceries or prescriptions. Housing, a fundamental need for people, shelter, especially in cold climate Canada, got the GST, but with the $450,000 threshold so that 95% of homes would be tax-free. The government also promised the threshold would increase by 2% every year, but that never happened. So instead of growing to about $900,000 today, it's still at 1991 levels. And the Senate's recommendation is very simple. Provide 100% GST HST rebate on all new housing under $1 million. Phase it out between 1 and 1.5 million, similar to the way that the first-time homebuyer one was structured, and index the threshold to inflation annually so we never have to deal with this problem again. The Department of Finance pushed back on this one, saying the new rebate is designed to help people trying to enter the market, not people who have already benefited from rising prices. And I understand their perspective on that. But The committee disagrees. Housing affordability affects everyone, and having two different GST rebates with slightly different criteria just confuses buyers and the market and pricing. If you simplify it and make it universal and stop being the government standing there with your hand out to try and monetize or financialize housing, right? More people will be able to afford houses, more houses will get built, and the tax base will improve in other ways. Okay, now let's jump into the development charge side of things. CMHC recently put a report on this. I've done a video on it already. This is the fee that most Canadians have never heard of, but are absolutely paying for: development charges. These are municipal fees that developers pay to cover infrastructure costs related to new neighborhoods. So your roads, your sewers, water, transit, recreation, libraries, sometimes even fire, police services, police stations. In theory, these make sense. Growth should pay for growth. But in practice, they've become a massive hidden tax on new home buyers, and the government just keeps pushing more and more costs into that category. The Senate found that development charges in Toronto have increased 800% over the past few decades. Not 80%, 800%. That's an 8x, and that's a low estimate. Some people have them at like 20x. At the same time, the reserves, the unspent but collected development charges at the City of Toronto, are also skyrocketing. So they're not even actually doing anything with this money immediately, right? Like they have earmarked a bunch of it for future things, but it's not being put into action immediately and actually benefiting the owners who purchased those properties right away. It will I think some of the spending plans are like 15 years out. So is growth really paying for growth? In Toronto, these charges add $200,000 to the price of a single family home. And in Moncton, they add $10,000. Okay. So let that sink in. Same type of infrastructure, same purpose, 20 times the cost. Is it that much more expensive to build a water and sewer in Toronto than Moncton? Here's what's actually happening. Okay. The development charges were originally designed to fund infrastructure directly tied to new development. But over time, municipalities started using them to fund general city expenses, parks, wastewater systems, things that should be funded through property taxes or the OPEX budget or municipal bonds. Why does this specifically matter? Because when you finance a development charge through a mortgage, you're paying interest on it for 25 years at 5, 6, 7%. Meanwhile, cities could finance the same infrastructure through municipal bonds at maybe 3 to 4%. Mike Moffat put it perfectly here. New homeowners are subsidizing existing homeowners through higher cost debt. And then we wonder why housing is unaffordable. And get this, beyond just Toronto, David Wilkes revealed that Ontario municipalities are sitting on over $12 billion in unspent development charge revenues. $12 billion just sitting in reserves funds, not building the infrastructure. Like nobody looks at Ontario's infrastructure or the GTA's infrastructure and says, this is the world-class infrastructure that we are talking about for the world-class city that is Toronto. And yet we have billions of dollars sitting, doing nothing. I don't even know if these are collecting a interest yield in municipal development charge reserves that have been collected, paid for by brand new home buyers that aren't being spent to pay for growth. I thought growth was paying for growth here. The Senate's recommendation here is that the federal government should tie infrastructure funding to municipalities, actually reducing these fees, not just promising to, actually doing it. And a lot of people have basically said that during the April election, Carney's team was taking a lot of things from the housing file from Poilievre's campaign, and this was something that he recommended. And it is an unfortunate reality that it is going to have to be the way that it is because municipalities have proven that they are not responsible enough to do these things. And so if the federal government is going or provincial government is going to start giving money to these municipalities in exchange for removing those, you basically have the federal government and the provincial government stepping up to actually fund that infrastructure themselves, which is actually the model that we had in the 1990s before the development charge. And a lot of this started when the Harris government in like the early 2000s actually downloaded a lot of these municipal infrastructure issues onto municipalities. But it used to be the responsibility of the Fed and the province to do it. And I think, after a couple decades of trying it with municipalities sitting on this issue, it's become pretty clear that they're not going to get the job done. So we probably need to give it to the people who are. And the Fed wants, or the Senate wants, full transparency here. Every development charge should be itemized, show buyers exactly what they're paying for, the same way you would when you go and buy a new car and you get that big itemized receipt. Basically shows you like a breakdown of every cost that you paid for, including like your interest costs, etc. That needs to exist for housing. And we need to stop the tax on tax problem where basically sales taxes actually get charged on top of development charges that are already embedded in the home price. You literally have tax on tax at multiple phases. Now let's talk about timelines, okay? Because this is where the dysfunction becomes almost comical if it wasn't so tragic. Very Shakespearean, I guess, both tragic and comedic. The Senate found that it takes an average of 11.6 months for Canadian municipalities to assess a development application from the time they've received it to getting a completed application to the time they render a decision. That's just the assessment, okay? Not even building. A year, almost a year, just deciding whether to approve something. And this isn't the same across Canada. In Hamilton, that process takes 31 months. In Toronto, it's 25 months. In Saskatoon, London, Calgary, Charlottetown, Edmonton, Regina, and Moncton, it's under 5 months. Same country, same building codes, or it will be the same building codes in the next couple of months. Same safety standards. Some cities do it in 4 months. Others take 2.5 years. Peter Norman from Altus Group testified in this, basically calling this very excessive, and he's right. But it gets worse. Mark McQueen shared that builders told him it takes on average 11 years to build a new home or community in Toronto from the time they first meet with municipal officials, 11 years from first meeting to the move-in day. Calgary does the entire process in under 3 years. Dave McKay from MHBC Planning pointed to an Altus Group study that found delays in approvals cost about $58,000 per unit in Ontario for a 100-unit apartment building. Every month of delay is money for builders. Holding costs, financing costs, they're paying interest on money, they have opportunity costs, they have market risk, as we learned over the last couple of years. These all get baked into the final price, whether you like it or not, whether or not people want to feel bad for builders. It doesn't really matter. They're a manufacturer who makes a product, and any costs that they absorb during that process are going to get added to that cost. So trying to say that they should stop whining about it is just not practical, because they're just not going. We're currently in the phase of them not whining about it, which is they're not building any houses for consumers because they cannot afford to, because the market has constricted them so much. Both organically, by the market basically saying we can't afford to pay those prices anymore because of monetary policy, because of price to income, whatever, but also because the cost structure is horrible to try and bring a unit to market at those market prices. So here's why it's so slow. Some cities have up to 50 agencies that need to weigh in on a single housing project. Other cities have fewer than 25 and produce the same quality outcomes in a fraction of the time. The Senate found that some cities have municipal ombudsmen who coordinate between departments and solve bottlenecks, and others don't. So projects just sit there waiting for someone to respond to an email from 3 months ago. And a lot of the municipalities that have tons of agencies, they require like twice as many studies, right? You need a tree study, you need a traffic study, you need a shadow study. This isn't just about being thorough, right? Toronto isn't producing safer or better quality buildings than Calgary. If anything, actually, I would say they might be worse. It's just slower. It's pure bloat and bureaucracy and inefficiency and rent-seeking behavior. The regulatory process has become a self-justifying machine that adds time, cost, and complexity without adding any value to the process. So what can the federal government actually do here? Because municipalities don't report to Ottawa. They're creatures of provincial legislation. So there's a layer of government between the Fed and the province. The federal government allocated $12 billion annually through the Housing Accelerator Fund to help municipalities reduce development charges and speed up approvals. And to date, it seems to have accomplished basically nothing. Tony Veroni, the deputy chair of the committee, said there's been no corresponding decrease in development charges and no measurable improvement in approval timelines. Cities basically took the money and did nothing. The Senate wants to fix this by making future funding contingent on results. You want federal dollars? Prove that you can match Calgary's timeline. Prove that you've cut development charges. Show us the data. Officials from housing infrastructure and communities in Canada admitted that negotiations with Ontario and BC have been unsuccessful. We've seen this in the news. These are the two provinces where development charges are the highest and approval timelines are the longest. And the feds can't agree basically to cut time funding. The feds can't get them to agree to cut the TIDE funding. They did have some success in Toronto with the Black Creek sanitary sewer project, which will lower development charges in that specific catchment area. But one city project obviously isn't nearly enough. Matt Gemmell from the Federation of Canadian Municipalities explained the problem. Municipalities have very limited revenue tools, they said. They rely on property taxes more heavily than almost any other OECD country. Property taxes account for 90% of their tax revenue, and they don't grow with the economy the way income and sales taxes do. So basically saying we need to keep those low. So municipalities are being asked to expand the infrastructure, update aging systems, and they consider it an impossible task without help from other levels of government. The Senate's recommendation is that the federal government use financial incentives to push municipalities to adopt best practices, not just encouragement, actual funding tied to actual performance. And they want the federal government to lead a national effort to identify best practices, bring the provinces, municipalities, and developers together, study what's working in Calgary, Atlantic Canada, and other efficient jurisdictions, build a playbook for these municipalities, and then deliver the infrastructure and the funding accordingly.